Welcome back to Morning Trade Live. It's time now for the big picture. Let's welcome in the team from Charles Schwab, Liz Ann Sonders, the Chief Investment Strategist at Charles Schwab, and Michelle Gibley, Director of International Research at Charles Schwab. A nice ladies lineup for us today. Thank you so much to both of you for your time. Liz Ann, let's just start with you. I mean, the economy continues to be brought to you by the letter K. Unpack that for us.
Yeah, and I think you see it in the stock market too. So there's so many bifurcations in terms of the economy. You can look at everything from high income consumers versus low income consumers from a CapEx perspective, anything AI related CapEx versus more traditional CapEx. It's filtered into the stock market in terms of where the winners have been largely that not just AI infrastructure, hyperscalers, but broadening out into the broader needs, data centers, power generation versus other segments of the market, particularly classically defensive areas that are not doing as well. So I don't think that backdrop changes, but it's certainly a way to think about the economy and the market at a level at least one down from either the headlines of things like GDP or the headlines of things like cap-weighted index performance.
Okay, I'll just get to Michelle now. I just want to pick your brains about what we're seeing as far as currency moves. I mean, dollar weakness. Do you believe this could be set to continue? I mean, we've had some interesting data points out this week, particularly with respect to some of the PMIs, the Eurozone, very much Germany's services sector PMIs doing the heavy lifting here. Also, the OECD raising its forecast as far as GDP is concerned as well. How much does that factor in to what you're seeing in dollar right now? What's your outlook?
Yeah, the dollar is higher today after Powell's cautious tone on the Fed's rate outlook and the weakening of the German IFO Business Climate Index overnight. But, markets are going to increasingly look out to next year where growth is expected to slow in the U.S., but growth elsewhere is expected to accelerate, particularly in Germany, France, also Mexico and Korea, according to the OECD's updated forecasts. In those preliminary PMIs, the composite PMI for the Eurozone was the only economy to strengthen in September. And so longer term, the relative acceleration in economic growth in the Eurozone and deceleration in the U.S. could continue to boost the euro and weaken the dollar. And that would add to international stock returns. A weak dollar has added over 1,000 basis points to international stock returns for U.S. investors this year.
Liz Ann, let's just get back to you. I mean, you spoke of the bifurcation. I find it very interesting what some people have been talking about with this disconnect between what is happening here on Wall Street and the economy, particularly because a lot of these companies where there is the concern about concentration risk right now, I mean, their customers are companies, but they do rely on the consumer at the end of the day. I'm just wondering, you have worried also, or I should say, raised the alarm or highlighted complacency in the past with these markets. Where do you stand right now, given all of that in mind?
So I do think there is some complacency, but there's other metrics that suggest sentiment is not at some sort of frothy extreme, certainly not down the spectrum toward institutional investors. I think you see it with retail traders. I track a large number of baskets on a daily basis, and the number one best performing basket, in this case it's tracked by UBS, is the meme stocks, but pretty close behind are baskets like non-profitable smaller tech stocks. You've got the heavily shorted stocks. So some of those themes that we started to see from retail traders back to the 2001 period coming out of the pandemic. In terms of the consumer, what I think is interesting is that we've got to look, if you look at inflation data, you can look at goods versus services, or within goods, you can look at tariff impacted versus non-tariff impacted. And we are seeing a bias up the income spectrum in terms of where consumption has been most robust. But another component of this that is less well discussed that I think bears watching going forward is the demand destruction we are starting to see within the consumption space toward those tariff-impacted goods. So it's another way to sort of separate out components of either the inflation data or the consumption data to gauge consumer sentiment. So it's a unique period of time, both from a consumer sentiment standpoint and an investor sentiment standpoint.
Okay, and Michelle, I mean, let's just get to also the other news headline of the day, and that is obviously what we're seeing out of Alibaba. I mean, a huge jump there, but it is a tide that sort of lifts all boats as far as the whole capex narrative. You know, I know that you have written about the fact that we have shifted from this mindset of China being uninvestable now to, you know, the Shanghai Composite reaching a 10-year high this year, just in recent weeks. You and I have discussed that, but I'm just wondering, as we continue to hear this news out of Alibaba, and you've got the Cathy Wood funds of the world, you know, doubling down on this now after pausing, what this tells you about what we're seeing out of China and this whole sort of AI arms race from emerging markets.
Yeah, I just think we see a lot of optimism about AI. You know, as you mentioned, you know, the term last year was Chinese stocks were uninvestable, and now, you know, maybe there's some concerns about a potential bubble. You don't see that in the valuation. It's trading about 13 times next 12 months earnings on the MSCI China index. But the gain, which is up over 35% year to date for the overall index, is all coming from multiple expansion because earnings estimates continue to be cut. And so the question is, how long can that divergence continue? And yeah, Chinese stocks are 30% of the MSCI EM index. So the gains in Chinese stocks are pulling up the overall index. And AI is also pulling up some of the large Taiwanese and Korean companies in the index as well. You know, this arms race, if you will, between China and the U.S., I think it's just likely to continue for now.
Okay, and as we've discussed before as well, Michelle, I mean, China has been inexpensive, so no doubt attractive there for international investors too. Liz Ann Sonders, Chief Investment Strategist, Charles Schwab, and Michelle Gibley, Director of International Research, Charles Schwab, thank you both for your time today.